Assalamualaikum and hi to Madam Shafinas and everyone who's watching this video. My name is Mazatu Amira Shamila. I'm a member of Group 4 from a class BA16. Today, my team and I have a great opportunity to discuss financial, accounting and reporting in relation to a sole proprietorship business. So, allow me to share with you an interesting little establishment known as Kopi Kaif. The school place is indeed owned by Mr. Muhammad Azri bin Mat Hassan. And guess what? The name of the Kopi Kaif has its origin right from his beloved son named Kaif, and that's why the stall name as Kopi Kaif. Having said that, this business operates as a sole proprietorship and the entire journey took off back in 2024 where the duo of friends collaborate together. Since then, they have managed to expand their reach by opening up to 3 more branches. But today, we will focus on one of the branches at the Plaza Satellite B, right within the premise of the Faculty of Health Science at UiTM Puncak Alam at the number postcode of 42300 Puncak Alam. And what the primary product they offer? Well, it comes in the form of like coffee plus some tasty snack. Their menu boasts a variety of absolutely delicious options, with their re-owned coffee enjoying a certain popularity among the university students. People can get everything such as from classic black coffee, sophisticated matcha lattes, and even they can have some mocha. But the best part is they also have light bite they offer such as sweet steamed corn, which is a must-try menu at their shop. So, the driving force behind why Mr. Azri chose to set up this amazing cafe? Primarily, it serves as a safer option compared to selling heavier meal. Moreover, it truly captivates the attention of students because of the location that is very strategic within the heart of study area. Well, that's all about Kopi Kaif, and I'll pass it to my next teammate.
Now I will be explaining the business characteristics of a partnership, which is the business structure chosen for this project. A partnership is a business owned by 2 or more individuals who work together to run and manage the business. It is commonly chosen by small or medium-sized businesses because partners can combine resources, share responsibilities, and make decisions together. It is more flexible than a company and has a fewer legal requirements. First is the source of capital. For this partnership, each partner contributes around 2050. This shared investment reduces the financial burden on one person and gives the business a stronger starting point compared to a sole proprietorship. Next is ownership. This business is owned by 2 partners who share rights and responsibilities. They discuss decisions and contribute their skill to daily operations, which help the business run more effectively. Moving on to the existence, a partnership is not a separate legal entity, meaning the business and the owners are legally the same. All assets and earnings belong directly to the partners. Because of this, the partners have unlimited liability. They are personally responsible for all debts and obligations of the business, and their personal asset may be used if the business cannot pay what is owed. Next is management and control. The partner themselves manage the business, make decisions, solve problems, and plan strategies. This shared control reduces workload but requires good communication to avoid conflict. Now, for profit sharing, profit and losses are divided according to the partnership agreement. It may be equal or based on capital or responsibilities, as long as both partners agree. Lastly, books and accounts. Partnerships are not legally required to keep very formal records, but proper bookkeeping is still important to track income, expenses, and profit distributions. To summarize, a partnership allows share capital, share responsibilities, and share profit. It's easy to form and flexible, though it comes with unlimited liability and potential disagreements. Still, many small businesses choose this structure because it offers a good balance between teamwork and simple management. That is all for the slide on the business characteristic of a partnership.
Next, I will explain about the classification of the business items. The first thing is assets. Assets are resources owned by the business that have value and can help generate income. Kaif's Coffee. Assets are categorized into current assets and non-current assets. Current assets are short-term resources that can be converted into cash within 1 year. Examples include cash in hand, cash in the bank, and supplies inventory. These assets are crucial as they ensure the business has sufficient liquidity to operate day to day. Non-current assets are long-term resources that the business expects to hold for more than 1 year. These include electrical appliances and kitchen equipment such as freezer, coffee machines, and corn steamer. These items are vital for producing and serving the products efficiently. Next, we have liabilities, which are obligations or debts that the business must pay. KF's Coffee has two main liabilities. First is the kiosk rent, as the owners rent the kiosk space from UiTM. Second is the money owed to suppliers for goods and materials that are used to run the business. Moving on, we have capital. It refers to the assets that the owners invested to start and maintain the business. In KF's Coffee, the owners initially invested in inventory such as coffee powder and plastic containers, as well as essential equipment including the coffee machine and corn steamer. After that is expenses, which represents the costs incurred to operate the business and generate income. KF's Coffee main expenses include utility bills for water and electricity, the cost of ice for beverages, transportation costs for delivering supplies and products, rent expense for the kiosk, and employee wages. Finally, it's the revenue. Revenue is the total income earned by the business. KF's Coffee generates revenue primarily through beverage sales, especially coffee, which is the main source of income. They also earn revenue from food sales and vendor-based sales.
For this slide, I will explain the recording process of business used by Encik Azri for his coffee stall Kopi KM. Encik Azri used a manual recording system. First, he wrote all his daily sales and expenses in a notebook and sometimes in his phone note applications. He chose this method because it is simple, low cost, and easy to maintain, which is suitable for small business like a coffee stall that deal with many quick daily transactions. Now I will give explanation recording process Mr. Azri business. For step 1, source documents. The first step in his recording process is collecting source documents. Encik Azri keep all receipts for processes such as coffee beans, milk, sugar, cup, and gas. If no receipt is provided, he write a short note with the item, the date, and the amount spent to make sure every transaction is recorded. This step is extremely important because this document act as proof. They help him avoid missing information and ensure that even small expenses are tracked properly. For step 2, weekly recording. At the end of each week, Encik Azri transfer all the information from his receipt and note into a mobile application. He record the date of the transactions, the item descriptions, and the amount of money coming in or out. Doing this weekly help him stay organized and prevent his record from piling up. It also helps him spot trend early. For example, if certain ingredients are being used more than usual, or if expenses suddenly increase with weekly update, his financial information stay accurate and up to date. Step 3, final review and summarizations. The final step is monthly review and summarizations. At the end of each month, Encik Azri review all the recorded transactions. He total his income and expenses and calculate the profit or loss for that month. He then compares this total with his actual bank balance to make sure the figure match. This final review helps him identify if there's any mistake, missing receipt, or money mismatch. It also helps him analyze his business performance. For example, whenever he is earning enough profit, whether costs are rising, or whenever he need to adjust his pricing or stock order. importance of the system. Even though Kopi Kaif is a small stall, this organized recording process helped Encik Azri make smarter decisions. He can control his spending, plan his stock better, and manage his daily operation more efficiently. A good recording system also helps him avoid overspending and ensure he always know the true financial position of his store. In conclusion, Encik Azri used a simple but effective recording process by collecting source document, recording weekly, and reviewing monthly. He maintained accurate and reliable financial record for Kopi Kaif. This process supports the smooth running of his business and helped him plan for further improvement. Thank you.
Hello everyone, today I'll discuss the strengths and weaknesses of Kopi Kaif and relate each point directly to their real situation. Let's start with strengths. First, simplicity in record keeping. Kopi Kaif is a small-scale operation with only 2 branches and a limited menu focused on coffee and light add-ons. Bookkeeping needs are straightforward. This means the partnership can use simple system, a single cash register per branch, daily sell logs, and an Excel sheet or basic post app to track revenue and inventory. For Kopi Kaif, this simplicity reduces overhead and lower the barrier to understanding profitability. Because the owner used to manage a food stall where ingredient lists and waste tracking were complex, this simpler coffee model helps them focus on essential numbers like daily sales and cost of goods sold. Second, low operating costs. Compared to a full food operation, a coffee shop requires less space, fewer staff, and simpler supplier. Kopi Kaif benefit from lower monthly rent, fewer cooking utilities, and smaller inventory needs, mainly coffee beans, milk, and disposable. For the owner who shifted away from a high-budget food stall, this lower cost structure is exactly why the pivot made sense. This reduces financial strain while maintaining a steady revenue source. Third, flexibility in pricing. Being a partnership with direct owner involvement, Kopi Kaif can quickly adjust prices to match ingredient costs or student demands. For example, they can introduce student discount at the Rafflesia Hostel branch or promotional bundles near exam weeks at FSK7. This agility helps them remain competitive and respond to short-term cost fluctuation without lengthy approvals. And fourth, quick cash turnover. Coffee sales are instant. Customers pay when they order. This creates daily liquidity, allowing the business to cover immediate expenses like supplier, payments, and wages. With high foot traffic at both campus locations, Kopi Kaif can convert inventory into cash rapidly, which is vital for a small business trying to recover from earlier high expenses. And fifth, personal control. Finally, the owner and partners maintain direct oversight of operations, menu design, and supply choices. This hand-on control ensures faster decision-making and a personal touch that customers often appreciate in small cafes. Now, let's start with weaknesses. First, manual record prone to errors. While simple systems save money, relying on handwritten logs or inconsistent digital notes risks mistakes, missing sales entries, incorrect inventory counts, or reconciliation errors between branches. For Kopi Kaif, inconsistent record keeping between FSK7 and Rafflesia could hide real profitability problem. Second, limited financial analysis. Manual bookkeeping hinders the purse insight. It's hard to run month-by-month profit comparison, identify slow-selling items, or forecast inventory needs. This means Kopi Kaif may miss opportunities to trim costs or boost best-selling drinks. Third, dependence on the owner. The partnership's success currently depends on the owner presence and judgment. If the owner is absent or overstretched managing two sites, services quality or purchasing decision may suffer, which could impact both branches. And lastly, limited scalability. With constrained capital and manual system, expanding beyond the two locations will be challenging. To grow, Kopi Kaif will need standardized processes, better financial system, and possibly outside investment. So, what do we get from this strengths and weaknesses? In conclusion, Kopi Kaif shift from a high-cost food stall to a focused coffee concept created clear advantages, lower cost, faster cash flow, and operational simplicity. However, to secure long-term growth, the partnership should address record keeping, adopt a simple post or accounting tools, and gradually delegate responsibilities to reduce owner independence. That's all. Thank you. In conclusion, this study has discussed Kopi Kaif from several important aspects, including its background, characteristic, classification, recording process, as well as strengths and weaknesses. Kopi Kaif is a small partnership business operating 2 coffee outlets located at FSK7 and Rafflesia Hostel. In terms of characteristic and classification, Kopi Kaif can be classified as a small-scale partnership business that is owner-managed, flexible in decision-making, and focus on a limited range of beverage products. This recording process used by the business is simple and mostly manual, which help reduce operating costs but also limit detailed financial analysis. The main strengths of Kopi Kaif include low operating costs, quick cash turnover, flexible pricing, and strong personal control by the owners. However, the business also faces weaknesses such as dependence on the owner, possible error in menu record keeping, and limited potential for expansion. Overall, Kopi Kaif showed that a small partnership business can operate effectively when its business model matches its resources and market environment. With improvement in record keeping and basic financial system, the business has the potential to achieve better sustainability and long-term growth. That's all from us. Bye!
Ya, betul. Ya. Kita kalau boleh nak